Welcome back. It's time now to take a look at the top business stories. UAE private sector activity hits 20-month high in March. UAE to boost investments into Northern Emirates. And the managing director of the IMF says new approaches are needed to tackle global challenges. Let's look at the equity markets first. Both the DFM and the ADX ended the session in the red. Dubai's DFM General Index fell 0.7% to close at 1,537 points. The materials sector was the one to suffer the most as National Cement Company plunged nearly 4%. Other stocks to watch are Arab Tech Holding. Its shares dropped 2.4%. Dubai Islamic Bank lost 1.3%. Heavyweight Ema Properties fell 0.9%, while DO was down 1.3%. DP World, on the other hand, was one of the best performers with a plus of 3.3%. 90 million shares were traded, valued at 118 million dirhams. Same picture over at the capital. The ADX fell 0.5% to close at 2,588 points, with the industrial sector posting the largest losses. National Marine Dredging Company dropped 8.4%. The construction sector was mixed. Alder Properties fell 2% and Surur Real Estate dropped 1.5%. While RAK Properties gained 2.6%. Telecom operator Etisalat was down 0.5%. 88 million shares were traded, valued at 135 million dirhams. And let's now take a look at the GCC equity markets. The country's main benchmarks ended mainly higher today. This week is all about monetary policy meetings. The European Central Bank and the Bank of England will meet on Thursday. The Reserve Bank of Australia did so already today. Let's look at the ECB a bit closer. It is in a dilemma as the Eurozone's periphery countries struggle with rising refinancing costs, while countries like Germany face a pickup in inflation. The ECB is under pressure to not inflict more damage to Greece, Spain, Portugal and Ireland by raising rates. On the other hand, its sole purpose is to rein in inflation. To talk about the difficulties the ECB is facing, we are now joined by Timothy Fox, Chief Economist at Emirates NBD. Hi Tim, welcome to the show.
Thank you.
Now tell us, how does the ECB's one rate hike fits all look like, or is there no such thing?
Well, certainly there's one interest rate for the Eurozone, but unfortunately it doesn't look as if that interest rate fits or suits all the countries within the Eurozone. Certainly when you have economies like Germany, which are likely to grow by around 3% this year, against economies in Greece, Spain, Portugal and Ireland, which are more likely to contract, then the risks are very clear if the ECB raises interest rates that will cause damage to the peripheral economies in the zone. So I think the single currency, the single interest rate is going to inflict pain to some extent across Europe in coming days when the ECB meets, and is likely to raise rates by around 25 basis points.
When do you think will the US Federal Reserve, the Central Bank of the United States, start tightening its monetary policy? And it is interesting for the UAE also, as it pegs the dirham and with that also its interest rates to the US.
Well, the Federal Reserve is probably less concerned at the moment about inflation than is the ECB. So we don't think that the US is likely to raise interest rates before 2012. I think that what that means for the UAE is that interest rate environment will also remain quite easy over the coming months and probably for a year. Actually, there is quite a lot of liquidity in the financial system at the moment, and I think market interest rates may, if anything, come a little bit lower over coming months.
Thank you very much for coming in. See you in 2 weeks. And now to our top stories. The UAE's private sector activity hit a 20-month high in March of this year due to an increase of new orders. According to the HSBC Purchasing Managers Index, the country's manufacturing and services sector rose to 57.7 points. In February, the index stood at 54.3 points, well above the 50 mark, which separates growth from contraction. The index surveys 400 private sector companies. According to a local paper, HSBC economists say the data points to recovery that is slowly gaining speed. The survey also showed orders for the non-oil private sector rose to 58 points last month, up from 57.6 in February. That's the second largest increase in the index history. The UAE plans to increase infrastructure spending in the Northern Emirates as well as create more jobs for nationals this year. The Minister of Economy Sultan bin Zayed Al Mansouri told reporters at a conference in Dubai that the focus is now on projects within Fujairah, Ras Al Khaimah, Ahman and Al Quwain. He added that jobs for nationals in different sectors must be addressed where more nationalization is needed. The cost of insuring Dubai's debt against default now costs as much as before the economic downturn. This comes after the Emirates' strong economic recovery, especially in the first quarter of this year. Dubai's 5-year credit default swaps dropped to about 380 basis points this morning, according to CMA Data Vision's Sovereign Risk Monitor. The cheaper the cost for insuring Dubai's debt, the more confident investors are with the economic recovery. The CDS levels are now hovering around the same levels where they were in November 2009, before the Dubai government announced a standstill on debt repayments held by state conglomerate Dubai World. And in our fast financial news, Abu Dhabi's media zone 2454 will be the first free zone in the capital where customers can choose between the two national telecom providers Etisalat and Du. This will be the first place outside of Dubai where Du will have presence in terms of fixed-line telecom subscriptions. The 12th Annual Regional Gulf Audit Conference came to a close today. The main focus of the event was on fraud prevention. Experts emphasized the need for professional practices in fraud examination and prevention, as well as incidents management and forensics. The Ras Al Khaimah Investment Authority has sold control of the Georgian Black Sea port of Poti to APM Terminals, the port arm of Danish company Møller-Mærsk. APM Terminals purchased 80% of the shares and plans to invest $65 million into the reconstruction of the port. And after the break, we will run you through what's making the headlines in international business today.